Hello traders, welcome to your economic calendar update for Monday the 9th of March 2015. I hope you all enjoyed your weekend and enjoyed the excitement of the non-farm payrolls on Friday night. It was definitely something to be trading, and with such a clear outperforming data figure coming out of 295,000 jobs added and the unemployment rate dropping to 5.5%. That's why we had such a big move, is because it's surprised the market for one, and two, it's just a fantastic result where we now have the market brutally realizing that we have a divergence in economies. We have the US that's looking to raise rates, and if their economy keeps powering ahead the way that it is, eventually they will be forced to raise interest rates. And other economies are still looking to cut interest rates, or they're on a wait and see holding pattern, like the New Zealand here, where they've got a housing bubble, but they have other parts of the economy that need the stimulus. So raising rates would hurt those parts of the economy just to try and save the housing. But they're looking to do other things and implement some other policies where they will tax investment properties much greater than housing properties where you're looking to buy a house for your personal dwelling. So we'll look at that. If they come out and make these statements later in the week that they're going to keep rates on hold and they're going to put in this policy to try and curb the housing bubble, well, then we could see the falls be capped a little bit. But the economy is definitely, New Zealand's definitely not performing as good as the US. Fundamentals have caught up with the technicals, and we're going to continue to see a slide, I'm sure. The Australian dollar versus the US, once again, this is the daily chart. We had the uptrend. We had a little breakout down to support level. We had this falling star candle pattern, which I mentioned, and then the non-farm payrolls kicked in and confirmed that we're headed lower for the Australian dollar. And I've mentioned it for some time. That is my preferred trade. Is the fundamental reasons behind the Australian dollar doesn't justify their currency being high, and I think this could fall quite a large number of pips. As you can see, it bounced off. You could nearly say the Fib 50, but definitely the 61.8. The extension level is 45 or 44 and a half. So 45 and a half and then 44 and a half. But we could get down into the 72 cent range. If we zoom out to a weekly, let's see if I can minimize this. And it's going to get ugly, but we don't have a lot of support. We had the 2008 GFC lows down at 59, but as soon as we break this level, as soon as we break these old lows, there's not a lot there. But I think if we do put in a line here, so yeah, the 44 and a half would be a good place to take profit as a historical level, and then we can reassess what's going to happen from there. It's hard to know, but that's why keeping an eye on fundamentals is the best course forward to know when to take profit and make sure that you get as most out of you can from the falls. We want to maximize our profits on the way down and keep compounding on those profits, adding positions, moving our stop loss, locking in some profits. As soon as we break out the lows, you could possibly add another position and so forth all the way down. As soon as we make run towards whole numbers. I'll be talking more in the future about all my trading strategies and sharing that with you, and how I compound these returns. But for now, the south side on the Australian dollar is definitely the way to go. The Great British Pound, we had this beautiful breakout of the rising wedge, and it's just kept falling. Surprisingly, the amount that it's fallen has caught me a little bit by surprise. However, I think that we could start to see support around this region, and for it to break $1.49 and a half will be a big, significant milestone, and could open it up to lower on the downside. That's going to come down to what the UK have in store for their interest rate policy moving forward. Will determine if they can stop the bleeding of their currency. But with their currency being lower, it's only going to help things in the short term. So I don't think they're too worried about their currency falling. The euro is just falling like a stone. We had this consolidation that we spoke about that was really painful, and you need to be making money on the breakout of that. We had a few days of consolidation here at the start of the month, but it's just fallen away ever since. I think this will continue. There's nothing that can stop the euro divergence from the US divergence, and we could get some data that may create some short-term bounces that will offer you to get in and start shorting rallies and get in at higher prices, and it's not a bad thing. But overall, the euro economy is getting worse and the US is getting better. So that fundamental divergence is just a perfect reason to continue this short. If I go to a monthly, this falls quite impressive, really, if you have a look. Very impressive. And we're coming down to support levels now, but once we take that out, we could be getting down to 2000, year 2000 levels, 2000, 2001. And that's not surprising, like the economy is not going good, but whether it goes in a straight line like this all the way down to there will 100% determine on how the Eurozone and the ECB handle the situation. I don't think it'll just fall like a stone. I think we will have periods of consolidation, we will have periods of slight bounces, but sort of like this and then keep falling. So they fall a little bit, have a bounce on some optimism, some shining light, some hope, and then it not come to fruition. And we could see it trading down in this area before too long. It's not unrealistic expectation, but let's see if we go to a 1 hourly chart. It's a hard spot to trade into. If you didn't get in on the breakouts of the old lows that I mentioned last week, or you didn't get in on the non-farm payroll, there's a few opportunities on the way down. Where we are right now, you're probably looking for a bounce up into this area and you can look to short it. You want to have low position sizing because your risks are quite big. You'd have to put your stop loss up in here somewhere because of the downtrend, because of the resistance levels, and you'd have to work out your risk and then work out how many lots that you can actually trade. It's not a good position, but then you could be scalping it on the way down, scalping it as it's making a run towards $1.08, and there's other opportunities similar like that. The US CAD, they had some weak Canadian data last week, but then we had strong non-farm payrolls. It looks like we're going to get a breakout to the upside. So this trend's going to continue, just US dollar strength, and it's going to keep continuing. The Canadian economy is not going as bad as New Zealand and Australia as a commodity currency, but it's leaving rates on hold. So therefore, with the US looking to raise rates, there is a slight divergence there, and we could see it grind higher out of this wedge. It definitely won't have the same scale of pip movements that other currencies have got, but it's definitely a trading opportunity, and it's definitely a pattern worth trading, and some money to be had. We've always been, for many trading sessions, long the US versus the Jap, and as you can see here, we had a rally. That's the weekend's candle, and we've continued rallying today. If I go down into a shorter time frame for you, 4 hourly chart now, you'll see the non-farm payroll spiked. We had a little bit of a pullback and a consolidation before the weekend, which is quite understandable, but then we've had a bounce at the open and the trend's going to continue. If you pull a Fibonacci from the non-farm payroll highs and lows, from the high down to the low, you'll see that it bounced off a Fib 50 at the open of today's session. That was a good entry if you weren't in a position, and you could trade it north. And I'll be looking to get out up here at $1.21, 700 would be where my take profit is. And I do have a take profit there on my order. So we'll wait and see what happens there, but I'm quite confident in that trade as well. All right, traders, that's it for today. Hopefully tomorrow I'll have some more trading opportunities, and until then, trade well.